Hey everyone, it's Simon here with your Tao Daily video for Monday, the 22nd of July, 2024. Just wanted to give you a quick recap on how we made over 140% in 6 days on some Nasdaq puts. So what happened, we had an all-time high in the Nasdaq back here on the Wednesday, the 10th, Thursday, the 11th of January. The actual high occurred on the Thursday. But this was also the day that we had a pretty steep fall of over 2%. Now, if I zoom out to a weekly chart, you can see that there was a big Fibonacci target reached. All right, if we run Fib levels from the 2021 high on March the 22nd of November 2021 to the bear market low of 2022 in October, we got to the 1.618 extension and we ticked it, literally to the penny. All right, so it was a big level that we were keeping an eye on. And then we were looking at things like the put-call ratio, which was gave us a very good heads up that everybody was long. Just as a reminder of how this works, when the put-call ratio gets below 0.8, that's an indication that everyone's buying calls, everybody's long, everybody loves the market and loves risk. And what happens is when everybody's long, you eventually run out of buyers, all right? And when a dip comes, there's kind of nobody left to buy the dip, at least in the short term. And that's what happened. We got a dip on Thursday, kind of traded sideways for the next 3 days. Then we got another gap down. Market has sort of gone nowhere near attempting to fill that gap yet, all right? So once this fall had happened, we decided that, okay, we've seen a change in the market here. We've hit a major fib level. Everybody's long. Now is a good time to put some hedges on. Okay, so what we did was this. On the 12th of July, we bought the QQQ 16th of August 490 puts. All right, so they were roughly at the money, and we paid $6.32 for those. And then on the 16th of July, all right, so it was 18th of July, so it was 4 days later. 18th of July, we sold those puts at a price of $15.65. So that was a gain of 147.6% in 6 calendar days. Not bad, all right? And what that does is it means if you're wearing any kind of smaller losses or pain on any of your other long positions, having a gain like this in your portfolio, it goes a long way to offsetting any other losses that you may have. The other thing it does is it keeps you on an emotional even keel. You're not sitting there thinking, oh my God, I hope the market doesn't fall any further. Oh no, look at my positions, they're all imploding. You're actually looking at this and thinking, wow, my NLV's gone up, even though the market's gone down. A couple of other positions that we have on, and we've still got on things like BSX, that's recovered well, it's continuing to climb. Things like TTD, that's had a pretty good bounce back as well, and they're both in the money. So, the puts made money, the long positions made money. It's just a really nice position to be in. So really just wanted to share with you there the rationale for why we put the puts on, how we did it, and how you can make money in a falling market quite rapidly using puts. I hope it helps, and I'll catch you on tomorrow's update. Thank you.